Good morning and welcome to another edition of Bourdier's Monday Report. US trade policy towards the rest of the world remains the factor that will determine how economic conditions evolve over the coming months. After the shock of the previous week's announcement of prohibitive tariffs, the Trump administration last week lowered rates on US imports for a period of 90 days to allow time for negotiations. For the time being, a general rate of 10% is applied to all imports, with some exceptions. As it is applying retaliatory measures of 125%, China will be penalized with a rate of 145%. However, electronic equipment will only be taxed at 20%. The average tariff on US imports is around 25%. If confirmed at the end of the negotiations, this would be the highest level since the beginning of the last century. Another world. The reversal, albeit partial, on these tariffs has enabled US equities to rebound strongly. They are up 5.7%. Elsewhere, equities are still feeling the shock, falling by 1.9% in Europe and more than 3% in Switzerland and the emerging markets. However, the lack of political stability and visibility is reducing investor confidence in the US administration. As a result, US 10-year sovereign interest rates rose by more than 40 basis points, causing bond prices to fall by 3.4% and simultaneously caused the dollar index to depreciate by 2.8%. The sharp 6.3% rebound in gold prices also reflects a degree of mistrust of certain US dollar-denominated assets. This week, the economic data to watch in the United States will be retail sales, industrial production, and a number of statistics on the real estate market. In the Eurozone, we have the ECB meeting, which is expected to cut its key rates by 0.25%. When risk aversion is high, some currencies perform better than others. This is often the case for the US dollar and the Swiss franc. In the recent period, only the Swiss franc has really played its role. Despite its low yield, the Swiss currency remains our preferred currency. That's all for today. Thank you for your attention and see you next week.